following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April, what is it, the 21st? I should know the day. It is April 21st, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. Of course, you can send me an email, steve@tfnn.com, as Warren did. So we're going to take a look at his email. And inside the Tiger's Den, any ping will do. Let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 21 points, trading at 20,557. S&P off 6, about 0.3% to the downside, trading at 2349. NDX 100 off 3. Russell's down 4. Semis are off 6. New York Stock Exchange down 0.33% out here. Gold is up $5, trading out at $12.88. Silver's off 12 pennies, trading at $17.89. Light sweet crude having a tough time. Of course, we looked at that a few days ago and said lower prices is what the charts were telling us. Well, lower prices is what we have today. Straight out at $49.38, down $1.33. Leading the charge here to the upside, you've got Rockwell Collins up $5, Proof Point up $5. That's 5 and 7% respectively. Black & Decker, Stanley Black & Decker, that's up 3%. Sanderson Farms, the egg company, they're up $3. Kane International up 21%. Wow, that's interesting. Honeywell is up $3. Priceline is your leader to the downside off $10, 0.6%. Clearwater Paper down 7.70. X Biotech off $7. National Beverage, that's Fizz. Oh, what a relief it is to the downside off 4.60 or 5%. But I want to look at whatever it is that you want to look at. So what are the markets doing? Let's cover those first. First, we're up against resistance, so we have pretty much a sideways-ish type move out here. The question might be, so what is, I don't know if your question is this or not, but one question might be, what are the markets going to do the rest of the afternoon? I think there's 2 or 3 charts. I'd say there's 3 charts that I'll be paying attention to answer that question. The first chart here is the ES Mini. Now, the ES Mini, just as we were coming on the air, completed or got down to, see that price oscillator at the very bottom portion of my screen, got down to the 0 line out there. And you can see we have a TD set up, a 9 count out here, all within inside the 6. So we should see price stabilize here for a bit of time. Doesn't have to, but we should. Doesn't mean it's going to happen at 110. So I'm talking about over the course of the next, let's just call it hour, we should see price stabilize. We should see Stevie's red line, you'll see it if you're watching this on the chart out here, and price eventually catch up to each other. Then it just depends on whether and how that deflection, should that occur, take place out there. But we probably don't see the stabilization effect until we see the NQ perform the same pattern out here. So come on, work with me. Let's go take a look at the NQ 30-minute chart. And because it is also headed back to the 0 line on a 30-minute basis, well, why is there a delay here? This is like a real bummer. Okay, there we go. So you can see that we're getting towards that 0 line, that convergence of those three lines on my chart. And it's at that stage where we ought to see some type of sideways-ish type move, price get back to test the red line, and if it bounces off and moves to the downside, we ought to see prices close lower at the end of today's trading session. Does that mean that the move higher is over? No. This is intraday charts out here. If we were to go take a look at weekly charts, we can do that. Let's do that out here. Give me a moment. Wow, I am amazed at how slow this is all of a sudden starting to operate here. That is a bummer. Makes it just so much more difficult for me to actually do a show with you. If we take a look at the Dow, and the Dow's going to be the weak link out here. How about this for not populating my chart? What in the Sam heck is going on? Wow. Okay, this really makes it hard to actually show charts and do a show. But if we take, here's the weekly chart. We're just going to have to come up with some good one-liners or something. Feed them to me in the den, would you? But if we do take a look at the Dow at this stage here, you can see for the week it's just slightly higher. A little bit higher than the close of last week. So the NDX 100, a whole different story out here, but I'll punch in the symbol. There's no telling how long it's going to take for this. Oh, there we go. Okay. So as we look at the NDX 100, you can see a much different picture. Don't pay attention to the TAS profiles as I post these indices up here. But you can see in the NDX 100, we're still trading into the April 3rd swing point, the low, which is 5,400.08. So this is telling us that the top of that swing point, 5479.86, wants to get tested, and that is likely to be delayed until next week sometime out there. Okay, so you've got the Dow's off 62 right now. If we go take a look at the futures indices out here, let's go take a look at those. And what we, for example, in the newsletter, my newsletter, I don't really talk about the newsletter too much during the show out here, but as subscribers know, the suggestion this morning was for conservative traders to go ahead and take their profits in the Qs. We jumped on board the QQQ series ETF right at the open on Monday. Price ran right up to the resistance levels of these different equity futures contracts, and it just said, hey, now is the time for a conservative trader to go ahead and pocket those profits. And then, as far as where price might head to, I don't know. Price is headed higher over time. The question is when, and I think it has to wait till next week. Now, in the case of the ES Mini, pulling back and testing 2338.95, and we're at 2342. That is that's normal. That'd be no big deal. In fact, price could come all the way down to 2330 we'll call 0.75, and there's just simply nothing wrong. Just a lot of moving up and down. It's really going to be the Qs, though, that I think provide us with the piece of information. For example, if at the end of the day, and you know how I hate saying at the end of the day, but at today's close, if the Qs were to close about 54.41, boy, that is mucho strong, grande strong, or something along those lines out there. If it doesn't mean we've got a total failure out here. No, it just means that the market can continue to pull back as it meanders higher. Remember yesterday, at yesterday's close, a higher advanced decline line in the New York Stock Exchange. When I say higher, a new all-time high. Bull markets do not end like that. See Rhodes with TFNN. During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you two simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's take a look at some requests from Warren out here, and then we'll go back and take a look at the markets. We'll kind of recap what they've done for the week, what signals to you and I are present that show that a bottom is in, what additional signs we need to see in order to confirm that signal, and then maybe where price will head to from this point. So what Warren writes in, hi, Steve, will housing stocks follow these subprime lenders in 2008, as in 2008, subprime lenders. So he's got PHM or Lennar, for example, home builder, as the housing stocks, and then he's taking a look at the MTG as a ticker symbol and ESNT. We won't look at all of them, but Warren, when I punched up ESNT, that is Essent Group, so they're a mortgage-backed reinsurer out here. It's a very interesting pattern. I don't know if you noticed it. You probably did, but I want to go ahead and at least share this with the listener base out here. It did form an island top. Now, I believe this stock here is at all-time highs. Let's just make sure. Yeah, so we got it on a monthly basis right now. So the interesting thing about this equity, and with regard to your premise, I won't really answer your premise. I don't know that I can answer your premise from a fundamental standpoint. My take fundamentally is that housing is a way different scenario than it was back in 2007, 2008. So I don't think the time periods are comparable. But with regard to a question as far as the stock chart, and whether there's potential problems in Essent Group, you would have to say being at all-time highs and forming a island top is a fairly ominous picture out here. Now, you might say, what is an island top? Well, if you take a look at the trading session from April 18th, the very high of that trading session is 38.02. The very next day, this equity gaps up with volume, by the way. Volume there was 1.3 million shares. The low of that day, 38.31, creates a little bit of a gap. Yesterday was really a sideways move, just traded with inside the candle session from that prior day, and this morning gaps down. Gaps down with fairly decent volume so far, 855,000 shares. Remember the gap to the upside, the potential blow-off top, I suppose, 1.4 million shares. But you do have an island top. Now, we have a few other things here for you to consider. Although also, by the way, while that was occurring, while price was moving higher, it was doing it with less relative energy. So today's candle session does form that bearish reversal signal that says, okay, time for price to go ahead and retrace. Now, the retracement level, the first areas of retracement on this chart are going to be Stevie's red dashed lines. And you've got two of them in about the 34.50, 34.70-ish type area. So that's one area. I don't know if the risk reward is there for you, or if you have a what seems like from your email message, a longer term bearish picture. Well, then you've got the signal now. Right? I mean, this equity here, if you're going to base what housing stocks are going to do based on what this stock is going to, if you're going to go ahead and make those connections, then you just got the signal of a lifetime. An island top, depending on where things close. Now, the beauty is if that island top fails, meaning price closes above the high from a couple of days ago, nothing more bullish than a failed bearish pattern out here. We also happen to have the weekly and the daily market profiles out here. I would say not until you see it close at least below the daily profile low, 36.12, can the so-called bearish option really start to take hold. Right now, price is still above support, that being the top of the daily and the top of the weekly box. Depends where price closes at the end of the day, Warren. If price were to close below 37.44, then you're back inside what we'll call the profile range out here. But with regard to signals, it doesn't get better than this with regard to what I think you're thinking based upon your email. Now, if we go take a look at Lennar Homes, LEN, as a ticker symbol, we go see what it is doing. It has pulled back over the course of the last couple of days here. Yesterday moved, we call it moving lower, about 2.8 million shares. The swing point out here is about 3 million shares. So it's not exactly moving lower with more volume than the day before that, but still not exactly blowing apart. If anything, if this is also going to move lower, you need to see it close below 51.44, which thus far has acted as support. If you see it close below that, well, you want to see volume accelerate. You want to see volume start to exceed more than 3.2 million shares and then close below 50.24. If that occurs, then you're bringing into the price area 45.02 as your low to 47.94 as the high out there. That is in Lennar. If I go over to my other stock chart system, and take a look at some of my proprietary tools out here. We put that up on the screen, another screen. We'll see if anything pops up. I don't have another topping signal for you inside of Lennar Homes, at least on a daily basis. But with regard to the other equity, ESNT, it's all there for you. It's all there for you. You got that nice island top. So thanks for alerting us to that pattern that is out there. All righty. I'll look for through the emails when we get to that next break in a couple minutes, see if there's some other requests out there. Let's come back to the overall markets. I don't have the stock chart up, but yesterday when we were on the show, we were looking and we were suggesting to you that the end of day reading on the advanced decline line would be very important. If it had closed a new all-time high, then the message, which has been consistent with this tool over the last quarter century, has been that new highs are going to come. There's higher prices coming at us. Doesn't mean that it's the following day or doesn't mean that it's the following week out there. There still could be retracements. But it does say there ain't no major top in play out here, not at least for a few months. That at least is the information that comes from that advanced decline line out there. And which is really very cool. In fact, I was quite surprised yesterday when I pulled it up and saw that we were at new all-time highs. Wasn't surprised when we closed there, but was surprised when I saw that intraday. So what does that mean? Or what other signals did we have out here this week that said to Stevie, we're going to buy the NDX 100 at the open on Monday? Well, one of those tools was Thursday's action, right? Thursday's action, when we took a look at the trend reading, that is the bottom, that's the Richard Arms Index out here. We took a look at that reading, which was above 2, was 2.42. That was the closing of that. And then, you and I were looking at the volatility index, and we were looking at all the clues that were coming from that spot volatility index compared to its futures, contracts, and so forth. And in essence, that is what this middle a section of this chart shows. I show when these two indicators match up. meaning above their threshold levels. In the case of the center panel, it's just above 1 because it's dividing 2 indexes out here. Excuse me while I get a little bit of agua. And you can see on the bottom of my chart, when you get the trend index combined with this other indicator involving the volatility index, and those two line up, you look at my chart and you tell me if you're going to jump in on the short side of the market come Monday morning, or you're going to go ahead and take a long position. I mean, folks, this tool works so well, it made it really easy. Really easy. Now, what did price do yesterday? With the S&P 500 ran right into that resistance zone, right at the top of that descending trend line. If I'm correct, or these charts are correct, and higher prices are to follow, this line will fail. And as soon as that fails, it's up to the moon. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, okay, so we took a look at one thing that said, hey, here's what needs to happen in order for a confirmation that the move higher is going to go ahead and continue higher for weeks to come. And a second thing, I think perhaps the most important thing that I'm watching now, and it's with inside the New York Stock Exchange, and I think understanding the advanced decline data which includes the volume aspect of it. But also what I do is I take that advanced decline information and I strip out all of the unchanged issues on the day, which, by the way, there can be many of them. And what that does is that gives me a adjusted summation index. Now, when I say summation index, it's just summing up all of the advanced decline data. And there's some very interesting patterns. Right now you can see as of yesterday's reading, because my tally on this, because it's all manually done, is at the end of the day. And yesterday was a minus 85. Now what I am anticipating is that we're going to see higher prices. We're going to see this advanced decline summation line approach the zero area. The question becomes when it approaches that zero area, so here we have higher prices that should follow. As it approaches that zero area, does it close above zero? Or does it begin to get deflected? And I'm not talking just by, hundredths of a point out there, but truly go ahead and close above zero. Because if it gets to zero, we've looked at zero lines here with some of the other tools. If this here just gets to zero and turns back down, that's a problem. You can see I have other zero line failures. I even had one back here in 2015, the August, what was this? Let me make sure we're in November 2015 out here, when it never made it back to zero and it turned down. So this is really, really, really important. And it's really important from the standpoint of if and when we get above zero, which I suspect we are going to, the message there, which has always worked, by the way, says that we're going to higher ground out here, higher ground inside of the New York Stock Exchange. So we don't have enough data right now. We have to wait to see. And how quickly can we get to zero? Just depends on what the advanced decline data looks like over the course of the next several days. It's not going to happen today, but it most certainly could happen next week. But I think that this is the chart that is the most important chart next with regard to helping us navigate where prices are headed to. It won't matter to me whether or not we see the Dow get back to break area. The S&P really is what we're really watching, right? We took a look at the ES Mini and said we should have a pause in price moving lower. We should see my red line go ahead and price should go ahead and meet. And then from there, we'll be able to identify what price is going to do for the rest of the afternoon out here. Until then, sideways-ish type market is what you could or should really anticipate. There's no magic in making that call. You just watch that pattern repeat over and over and over and over and over again. It doesn't work 100% of the time. I can vouch for that, but it works such a high percentage of the time that you just simply don't ignore it. Just like the last one that you and I just looked at by taking a look at an adjusted value of the advanced decline information and creating a summation index out of that. So that is important. All this data is important, and you and I, we can identify the next major bear market when it's going to happen. And that's what's going to occur at the workshop next Wednesday from 5:30 to 6. If you're a TFNN member, and odds are you are, but just make sure that you are by coming over the homepage at TFNN.com and up in the upper right-hand side, hit that login button, go ahead and input your password. You might say, I know I'm a member, I don't remember my password. Hit that forgot password sign, get that sent to you, go ahead and log in, and then by Wednesday you will see a link on your members page that gives you access into that workshop. I'm going to show you because this is for long-term traders. So this covers 100% of everybody in our listening audience. You don't have to be an active trader. What I want to do is I want to show you how you can avoid the next bear market. That is, unless you don't mind taking a 20% or more haircut. In the last couple of bear markets have been well more than 20% to the downside out there. So I want to share with you, this is really important. And that's why this one here, this is for free for everyone. The cost is not attending. So I want to see you there, whether it's live or whether it is by archive out there. Let's go take a look at, I didn't see any email requests to take a look at anything. So let's go take a look at let's go look at the usual suspects. Gold. Gold's up $5. Why is gold up $5? Well, one of the reasons that it could be up is because we are seeing the Japanese yen just simply meander. We're looking at the currency pair. It's doing everything it can to form a bottom. If it does, in fact, form this bottom and we see a retracement inside the yen I'm referring to now back into the 112 area, we should see gold decline. But at this stage, we've got really just a sideways movement. Today, it's pulling back a bit, and so we are seeing gold trade just slightly higher. In the case of gold, the key level to be watching, or one of the key levels to be watching, is going to be 1272.80. Any close below, not a test up, but any close below 1272 says 1260. That's not a huge move, $12, but anything below 1260, that could be problematic for Goldilocks. We're not there yet. It is fighting. It's got its dukes up, and it is not ready to hit the mat out there. But 1272.80, that would be hitting the mat, and then it would start the 9 count. Is it a 9 count or a 12 count? I think it's a 9 count, isn't it? So with regard to silver, silver just does not look anywhere near as good as gold. Of course, you could say that from a number of different perspectives, but closing below its TAS daily profile of $18.10 suggests to you and I that if we see silver break, close below 1773, you will see 1723 in a heartbeat, maybe even less than 1723. So silver not showing the strength that gold is showing to you and I. In the case of light sweet crude, back $1.37, trading out at 49 buckaroonies out there. That one was just a classic. We had a caller who was asking, hey, what about light sweet crude? What is it doing? And we were taking a look at how it got back to the zero line of its price oscillator and then turned down. You might say, what do you mean, Willis? I'll go ahead and turn on that price oscillator right now. You'll see here on the bottom panel of our screen, it gets up to zero. It turns back down. That is not a good scene. What does that mean? There's nothing more bearish than a falling price oscillator below zero, and that's what we had on April 19th. Now that says price is headed back to the swing point. Well, it's not really that far away. The swing point is March 22nd. The high is 48.84. The low is 47.58. That becomes your price range. The caller had asked, is this going to be an A to B equals CD to the downside? We won't know until we see how price handles the 47.58 level. And that there is your Texas Tea light sweet crude. Let's go take a look at some things that are moving to the upside and to the downside. Proofprint. Who are they? PFPT. What they've got announcement better than expected earnings, up $5, but some people have been taking profits here. Let's just take a look at the stock chart. By the way, its price oscillator is below zero, so not a good sign for it. Let me go ahead and turn that off for the moment. Let's take a look at PFPT. You've got a brand new weekly profile for it. This was suggesting to us that 80.86 is going to be resistance. Has not gotten up there. If anything, this thing is probably, what is it probably doing? Can I tell you? Looks like just a sideways consolidation, to be quite frank. And Frank would say from $71.47 to $80.36. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Is that question from Peter from Park City? When is the next? The next being Thursday, April 27th, which would be the perigee lunar phase. Peter, I'm not sure if that's what you were asking, but if it is, that's it. So it's coming up this Thursday. So that would be, and the exact time on that is 12:22 in the afternoon. So on this coming Thursday, by the time I'm on the air at 1 o'clock, we'll know exactly what that price level is, and we'll be taking a look at what other patterns are out there to help us identify what the next move ought to be, what the markets are communicating to you and I. So at this stage here, we're really just looking at some of the individual equities out here. Just to get a feel for where they're headed to. Now, if you've got some other questions, though, please post them inside the den, and I'll be happy to go ahead and shift gears in a moment's notice. Let's take a look at Rockwell Collins, COL. This thing is a little rocket ship out here. Take a look at this move. It's trading out at $104. That's up 4.75% out here. This thing is breaking above all kinds of resistance, doing it with enough volume, it looks like. The volume that we're referring to is the swing point from April the 7th, 2.1 million shares. You're already at 2.5. Let's put this on a weekly basis. Let's make sure we're getting a weekly confirmation in the case of Rockwell. If we take a look at, wow, this is a big break for this equity out here because we're looking back at highs in 2015. We'll just go ahead and put kind of a yellow line across the, or red line, I suppose, across the top around the $99 area. And you can see, and this has been in a consolidation if you take a look at Rockwell Collins. So this says if we just simply measure, come up with a measured move, that's going to be, in essence, the measurement of this box. We'll go ahead and make that a yellow box out here. This says if this is a real break by Rockwell Collins. And by the way, the weekly volume so far is 19 million shares. This is a real break. This is a break-a-rooney. Yeah, this is a weekly chart. This is a huge break inside of Rockwell Collins. So Rockwell Collins, COL, is the ticker symbol, is on its way up into the $120 area. Now, we use 120 because we're just taking that measured move, that consolidation pattern, and saying that that's where price is headed to. Will price come back to test the top of this consolidation level out here? Well, we go back to the daily, and you know, there's not enough of a gap out here. In fact, I'd almost say there's no gap. The high here from, let me do this. The high, there is a gap, but I'm going to take a look at the high on April 7th was 100.24 and the low today, 100.10. So will this thing pull back to where it broke out? No, not necessarily. Not necessarily. But if you are a holder of Rockwell Collins, COL, I would stay tuned. because this thing is headed to the $120, and I would have to say to you, great trade a Rooney out there. Let's take a look at Stanley Black & Decker. Do you have any Black & Decker tools out there? SWK. If we take a look at this equity, that's up about $3.60, 2.7% out here. This, too, taking on new all-time highs. The problem is this thing has run into a bit of a problem with the trading session from March the 16th. There were 883,000 shares. You're up over that with more volume, but this is a significant resistance area. This being 136.90, you're trading at 136.34. But it does want to move higher out there. If we put this on a weekly chart, what does the weekly chart look like? So that weekly candle, right? You thought that the daily candle looked pretty bad. How's that weekly candle look to you? It looks really pretty good. From a weekly perspective, 5.8 million shares, and you're at 5.9. So Stanley Black & Decker wants higher price out here, over the course of the next several months, we'll call it. Let's take a look at what do we want to look at? When was the last time you ordered a Domino's pizza? And some of you might have ordered it last night, for all I know. It has been a while since I've ordered a Domino's pizza. But let's take a look at what Domino's is doing here. So this thing broke down, I think, on a daily basis. Let me put on the daily chart out here. On a daily basis, this thing broke down with some pretty decent volume back on April the 7th. So all you're seeing right now is a little bit of a counter trend move inside of Domino's. It's a good counter trend move in that today so far it looks like it's going to close above. It's a brand new daily box form. Looks like at the beginning of the week 178.95. You're trading 179.69. So price should get up to the level of this downdraft where it broke down. That's the April. This is an equity. If you were trying to buy a breakout, you would reverse the chart. You would be looking for price to come back to the breakout area to go ahead and go long. In the case of Domino's, for those that wish, what you're looking for is price to get back to 182.87. And then that would be an area where you would look to take a short trade out there. You want confirmation. You want to see it close above 182.87, because if it does, then what you need to do is you need to wait for about the 183.70 to the 184.50, 184.51 level. And you want to see volume decelerate. The opposite of what you want to do when you're standing over a putt. You want to see volume decelerate as it gets up into that resistance zone. Kidoki. Let's go take a look at some things here that are moving to the downside. Price line is off $10. Is that a big deal out here? No, not really. This is just a sideways-ish type move. Last time that we were down in this price range, 418,000 shares. You're down on light volume today, 259,000 shares. No big deal inside the price line. Inside Clearwater Paper. Ooh, this does not look good. Is it Clearwater? Yeah, Clearwater Paper Corp. What is so they're out with earnings, and the market does not like it. This is a wide-ranging bar, massive volume to the downside. Let's go try to figure out where this thing is headed to. Well, this is headed all the way back into the lows from February 11, 2016. So this looks like it's headed to about the 32 buck even Steven level to the 35.70 area. That is CLW, trading below all types of support out here in it. You've also got X Biotech, XBIT, 40%. So they clearly have run into problems. That is called a wide-ranging bar, right? Now, if you didn't look at it, if you only looked at the gap, you wouldn't call it a wide-ranging bar. But you and I here, we call this a wide-ranging bar. Now, volume on this is about 2.1 million shares. This is an illiquid stock. Man, there are some days where it doesn't trade more than about 40,000 shares. Not today. But something that is so illiquid like this, you know what? Let's not spend another second on it. It is a waste of your time, and I'm not going to waste your time. It's not a waste of time for us to go take a look at Intuitive Surgical. That thing had a strong day a couple of days ago, did it not? Today, just a sideways move. ISRG is the ticker symbol. You'd want to watch. I don't know. Is this at all-time highs out here? Let me put this on a monthly chart. I believe that it is. And just like the first stock that we took a look at for Warren, what you'd want to be watching for here is some type of gap to the downside creating a island top at all-time highs. I'm not saying that's going to happen. I'm saying that as a pattern that is out here because you had a strong move. Doesn't matter. You had a strong move on April 19th. But if this were to gap down for any reason below the low of the 19th, that is at 790.98, that would set up your island top reversal, much like we saw inside of ticker symbol ESNT. Dow's off 39, S&P's off 8. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I got a listener wrote in and asked, so where is it that I think that the NDX 100 is going to head to? I had alluded to that in the beginning of the show. So my target for the NDX 100 is going to be 55.42. 55.42 happens to be the weekly horizontal trading range boundary line. That is the green line that is on my chart as you are taking a look at it. It's not that price can't move above that, because it can. That is my primary initial target. The secondary target becomes 56.67. So it's anywhere between 55.41 to 56.67 is where we should see the NDX 100 trade to between now and sometime in May out there. And that is the thinking. Now, we'll have some other charts and tools that will give us a confirmation. If I'm wrong, just completely wrong, on this, in that the other tools that we've taken a look at that have identified bottoms in the past, if you don't want to ignore them, then what we'll see is we'll actually see the NDX 100 trade back to about the 5,200 level. But I think more likely than not, and we're still in the favorable seasonal cycle, don't get your skirt in a tizzy about selling May and say, hey, it's April 21st. We're just basically 9 days away from selling you know what. Not so fast here. Really not so fast. Okay, we had began the show and said, okay, we're at a pause point inside the markets. We're going to watch 3 charts. I showed you 2 of the charts that we were looking, or maybe I showed you 1. No, I showed you 2. I showed you the NQ and the ES. For me, it's really more about the NQ out there, but it was the ES that was the first one down to say, hey, pause is likely in order. We're seeing the NQ here, right? We're seeing where we are basically at or near the 0 line out here. So all of this makes sense, right? These patterns, folks, somebody had asked a question maybe, and I think the question was, Randy was asking a question almost maybe like, is there too much information so that you become paralyzed and can't make a decision? I mean, I'm really paraphrasing what the question was, but I think that was really the gist of it. And for me, the answer was no. When you're making charts, the question becomes, what is the time frame that you're making charts, that you're making your decisions on? Stay inside those, and then with regard to understanding, let's say, intraday type movements, just be able to anticipate what the market is going to do. So that's all that you and I have really done out there. And if we look at the ES Mini, right, we say, look, the red line, Stevie's red line and price are going to go ahead and connect. It happens shortly after we see that 0 line get tested out here. So right now, it's about the 23.49 level. We're at 23.46. The two are going to kind of come together. And the question is going to be, what happens when that occurs? Does price get deflected and continue moving to the downside? And if so, nothing more bearish than a falling price oscillator below 0, and that's where we're at. And if it overtakes that level, well, then you can't stay on the bearish side. I mean, you can, but if you're on a 30-minute chart making decisions, you can't, because that's simply just not the message that you would be getting out there. So that's what ought to happen over the course of, I don't know, could be the next half hour, could be the next 10 minutes, but typically those two twains shall meet. We got the same signal. The other chart, the third chart that I was referring to, was inside the Russell 2000. But because this is a delayed chart, delayed by 10 minutes, you can see here we've got the 0 line at the very bottom. We've got that convergence coming together as we speak, or at least 10 minutes ago it was coming together. So we'll watch to see where the Russell 2000 equity futures contract trades up to and whether it overtakes Stevie's red line. If it does, you basically close flat to higher on the trading session. So folks, have a great weekend. Was glad to survive it. I'm looking for some more R&R and want to be fully charged when we're back with you on Monday. So have a great day. Don't forget, go check out your members page and make sure that you can log in so that you can attend next Wednesday's workshop. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.